New month, new money, new plan, start of a new week, Monday. Could be an interesting start to the week. We've got red news on the calendar for the US session, 10 a.m. to watch out for. Here is a analysis on the US30, and could be interesting for those that want to stick around to see how we can go about analyzing the market on a multi-time frame basis. And here we've got a split screen. What I'm doing is I'm applying a top-down analysis approach, starting with the monthly chart on the Trend Predictor trading tools template. And on the monthly chart, what we're seeing is a scenario whereby last month closed with a fake out high, and what we've got here is a breakout from the month of September. So that's our switch level. We're somewhat bullish above, but caution due to the fake out high of the month of October. Drilling down to the weekly chart, we can see that we broke out of the previous week's highs. So we've got a bullish switch in play, and there is our switch level. Okay, so bullish above that. Just taking note that we are coming through into the upper third of the peak formation high, peak formation low range on the weekly chart. So this yellow box is the range that we're trading up through, coming up to something like a 78 Fibo as well in around here, I would imagine. So just a bit of caution there on the way through up into the outside day 100% range expansion target. This here is the outside day, and that was the range, peak formation high, peak formation low, breaking out of that range. And if we extend that, a 100% range expansion gives us that target to the upside, for which the market seems pretty much intent on heading towards at the start of the week, above last week's highs. Now, we also have an inside day set of liquidity to take note of. So it's a naked inside day area of stops that the market might want to come into before continuing higher. But we're not trading that play until we are breaking back below the Wednesday highs, 26th of November. So we're in breakout currently. So no reason to be assuming that we're flipping over, reversing back into those stops until we get back below that level. Okay. So purely from a market structure point of view, I would argue that we're coming up towards the monthly fake out high level that aligns with that outside day 100% range expansion target as a confluence area for the start of this week. Now, start of a new month, we can quite often see aggressive moves that don't want to fold in on us, especially on a Monday. So I'd be inclined to stick with the trend if we are indeed carving out a northerly trajectory through Asia and London for a parabolic day, and potentially parabolic on the session in New York coming out of our Wall Street open, depending on the data and how all that sets up. And just flipping over to our market profile template, we can see here that last week ended with a value area high up here and a low down here. Okay, so buyers paying higher prices coming out of the Globex value area. So a nice range expansion there taking place despite being Thanksgiving Friday. So that's quite interesting. We've got this scenario here where we're just watching out to see if the price isn't accepted back above that value area low. And let's see how the price behaves into the Wall Street session. If we're coming back through, as I said, into this volume area profile highs, then the inside day stops are going to be in play. Now, having said that, if we look to the weekly chart, what we'll note is that last week closed in breakout, not only of the previous week's highs, but also its own value area. So that's very bullish for the day ahead or week ahead. And also we had the same on the monthly chart. So as you can see here on the monthly chart, a move up through the range of the prior week, prior month, topping out, fake out high, however, closing in breakout of its own value area and the previous month's value area. So that is conflicting fake out high versus a firmly bullish market on the close of the month. And just to finalize on the Trend Predator, it would be worth noting that we are somewhat overextended. We've got 3 months of continuous breakout on the monthly, the daily chart, and currently also the 8-hour sessions are aligned in the same fashion. So we are overextended. So just caution. The Trend Predator indicator there is cautioning a weak uptrend context. It's not to say that we have a reversal in play, but that could well pan out. And again, as I said, we've got those inside day stops. If indeed this were to flip back below Wednesday's highs, then we're looking at a potential topping at the start of the week, a reversal into this long play and stops below as a initial target, and the weekly breakout level below there, the switch level. Okay, may the markets go with you.